Hey, welcome back to the Hub channel. My name is Brandon Burton, and I am here with the one, the only, Rob Roy. Rob is visiting us from the EWO channel. As you know, Rob is probably the smartest guy in any room, and he's here to talk to you about the markets today and what's going on. Rob, how you doing, buddy?
Good, Brandon. How you doing? Happy Friday to you. I
Oh, yeah.
appreciate all the comments. I don't know about all that, but appreciate all the comments.
Yeah, right. You're good to go, man. What's going on in the
All
market
right.
right now, Rob?
Yeah. Welcome to our live Q&A that we do every Friday here on the Hub Financial channel, utilizing this awesome Hub software. And I don't say that lightly. I've looked at all the Elliott Wave softwares that I know to exist, and firm believer this is the best. I wouldn't use it otherwise, but I've been trading Elliott Wave since 2001. To answer your question, Brandon, a little bit of a reversal today from yesterday. We were talking to our subscribers over at the EWO channel, ewotrader.com last night. And last night we had this, and I'm going to go ahead and take away today's move here, which is something that's pretty cool that you can do with this walkthrough button. And that's what we looked at last night. And so you could see that we're trying to break out of this triangle. When we did the market update last week, some of the comments were because we talked about how many triangles there were in the markets, and they're like, you must see triangles in your sleep. Well, yeah, kind of last weekend you did, because they were everywhere. So yesterday it looked like maybe we're sneaking out, but one of the rules that we talk about all the time, and the reason we share these rules with you, is they're things I've noticed over time, and they matter and they're important. And that's that one day means nothing. You have to have a second day, a follow through, or confirmation day. So you might have been tempted to jump in long yesterday with that move to the upside, but then you see today, and we're right back to the point of the triangle. So no harm, no foul. We're starting over, and we're starting with a new expiration month. Today's expiration Friday, so happy expiration Friday to everyone. And those can be interesting. So you kind of take what occurs on an expiration Friday with a grain of salt, because people are squaring positions, options, etc. And today, absolute reversal of what occurred yesterday. And so, as I said, we will start back again. It was pretty interesting yesterday, the fact that we moved to the upside. We'll be talking about some of the reasons that felt like yesterday was an odd day when we do the market update over on the EWO channel a bit later on. Hopefully you'll catch that over the weekend. But for now, we're just waiting on the market to give us direction. It's not going to do it today, doesn't look like, unless something really extraordinary happens moving into the close. But with that, I'm happy to take some questions. Lots of reversals from yesterday, so perhaps people have some interesting stocks to take a look at.
Oh yeah, dude. Always. We got Will here. Will's always here to support and ask questions. He wants to take a look at SLB or some of the oil services you might recommend right now, given the market situation.
Okay, yeah, let's take a look at both of those. And you're spot on, Will, with SLV. Obviously, you're aware of what's going on. We appreciate your viewership consistently, and just when it looked like, and we talked about this. It's funny, we talked about this last night with our alert subscribers at Evo Trader last night as well. So 21 has been the key level for SLV. We do have support there around 20 and a half. And yesterday we were down there again, and it looked like the bottom's about to fall out. You can see that there is nothing. It's a complete vacuum if we can't hold that 20 and a half level before we move all the way back down to 18 and a half. And we needed that second day. We needed a follow-through day to move lower. It didn't happen. Back to the upside we go. A pretty nice bid in silver and gold today. And so, as I said, you kind of want that second day, the follow-through day, but that sure looks like a reversal. And perhaps the dollar is going to give us a little bit of a break. And it seems that As you know, Brandon, I always try to give both a conservative and a more aggressive viewpoint. If you are aggressive, this feels an awful lot like a reversal day, not just some sort of a bounce off support. So I feel like if you want to be aggressive, you could come in now. If you want to be more conservative, wait a bit, see what happens on Monday. Again, being expiration, end of quarter, et cetera. Who knows what could happen come Monday. But certainly it looks like if SLV does have follow through on this, that we're going to head up to 23 at least. We'll have a lot of resistance there, so I don't think it's going to have an easy time getting through there, but maybe we're finally going to get a bid, and maybe at this point in time you could take a shot at it. It looks like at this point in time we're going to close above that 10-day moving average. There's time between now and when we close, and as you know, Brandon, we've done enough of these live events at 2 o'clock that what we were looking at with the market here changed significantly between now and the close. We'll see if that happens today or not. Again, you could be a bit more conservative and let it get above the 50-day moving average and take that trade from the 50-day moving average up to 23. But for now, an aggressive move might be, well, let me just dip my toes in the water here and see if we're actually going to get some sort of a bid out of the metals. Oil has been screaming to the upside, hit $90 a barrel this morning, and it's kind of consolidated a bit since then. You can see that on the chart of USO, we're up here about, what was the high of the day here so far, 81.28. And so there's speculation that oil may hit 100. You can see that we closed that gap that we had yesterday. So drop down, close the gap, trading near the top of that tap box. And so when you see that, you're looking to see, is there room for a continued move from here? And I like to look at the DMI, and the DMI looks pretty darn strong. The only negative that I would say, you don't get too concerned when the positive directional indicator moves down, but when the negative directional indicator ticks up, that means that there's a little bit of selling, at least maybe coming in, but there's still such great separation between those two directional indicators. I feel like we're just settling an overbought scenario here. There's the 10-day moving average. There's where oil is. We're overbought. A little bit of sideways movement would be warranted without any sort of a significant pullback. And it just doesn't feel like oil is done. And we actually, I thought might get an interest out of this, Will, is we looked at this last night on the weekly chart of the USO. So I'm going to take this off for now. And you can see that we have a zigzag pattern here. Now, of course, a weekly chart means that patience, because we're going out of ways, and perhaps we're heading up towards the 85 level here on USO. And then we bring that DMI back, and it just looks awfully solid here as far as oil. It's going to go up and down like anything does, but it seems like higher prices of oil are here for a while at least, and perhaps longer than we would be comfortable with, or longer than we'd like, especially when we go to the gas pump and fill our cars up. But on the shorter term, we're a little bit overbought, so a little backing and filling, a little consolidation here I think is warranted. But if you add a little bit of time frame to it, I think oil moves higher down the road from here.
That was great. You went over silver. I said SLV, but I might have said anyway. He wanted SLB, but you got oil, so I think we're good with Slumbers.
Oh,
we don't need to go over Slumbers.
Okay,
no,
SLB.
I think because
yeah, but we'll look at it.
But that was great on silver. Yeah.
Schlumberger is good, and with what's going on with oil, it's one of the bigger players out there. They're a behemoth. Now it doesn't have quite the confirmation from the DMI there. You can see the negative directional indicator moving up, the positive moving down. That's not really what you want. We are holding the 10-day moving average, but more important than that on Schlumberger is you want to see it hold 60. We did tap that on the low. We'll see where things close today, but we tapped that level on the low. And as long as you stay above 60 and above that wave 3 high, I think you can look for a continued bid in Schlumberger. Just a little concern that we're not getting more confirmation, more love out of the DMI as far as this break above 60 for a continued move. So I'd keep a real close eye on that. And if you're long Schlumberger, a break below 60, I think I would get out and then wait and see if it can reset up again. But as long as you stay above 60, I think you're okay. And maybe we get some sort of a stronger move here. Maybe oil's going to pause for a little bit here.
A great recap on that. Let's look at, we got this guy wants to look at NKLA. That Nikola?
Oh, Nikola, yeah.
Yeah, that's the battery. That's the, okay, yeah, heck yeah. Let's check that out.
Another EV player. And they're catching a bid. Not surprising, is it, with the price of oil going up? You feel like people are going to start looking more and more towards the EV space with the fact that, not only are oil prices moving up, it just feels like they're here for a while. OPEC has made no qualms about the fact that they want to keep oil as high as they can. They are seeing, the end of the gravy train there as far as supply. They know it's limited, and they're going to try to make as much as they can while they can. So I just don't see, again, pullbacks happen, but I don't see any sort of a significant move back down in oil, maybe until supply runs out. Not what we saw during COVID. Those days are long gone, I think, and higher priced oil, something we're going to have to get used to. And so we're going to start seeing stuff like this, even on some of these smaller EV players. Now we did hit that fuchsia line there, so 30-day moving average. I don't look at that for support or resistance, even though we tapped it on the high and moved back down. The keys here are the lime green line, that's the 10-day moving average, that's your shorter term average, and then the blue line is the kind of widely viewed trending line. The 50-day moving average gives you an idea of what the trend's doing. So 10 days shorter term, 50 days more trend. The reason I have the 30-day on there is I look for when the 10 and 30 cross, and that's just something that some of my old market maker friends taught me that floor traders look at. So I put it on there. Sometimes you can see a change of trend coming ahead of time on those crosses. But tapped it on the high, came back down, but we're holding above the 10-day moving average. So that little bit of a bid there at $1 a share. And you can see, if I space this out, I think you can see that we do have a positive cross there with the positive directional indicator breaking above the negative. Now the ADX is moving down, but remember the ADX is a bit more of a lagging indicator. It sometimes takes time to catch up, but these two directional indicators are very dynamic and very quick to move with what occurs on a daily basis. So you pay attention when you see those two lines crossing. My point here is that we might not be done with Nikola. It might come up here and at least test 2, and then we'll have to reset because there's resistance there at 2. That would be moving above the 50-day moving average. We'd most certainly have a positive 1030 cross. So it's going to be interesting to see how that plays out. And again, as oil stays higher in price, then you going to start looking at these things. Now, are we going back to these days? I don't know if we're going quite that far yet. So we just have the $2 range in the eyesight here, in the eye range, and we'll see if we get there and then reevaluate. But it's suggestive that that's a possibility.
Hey, don't laugh at me, Rob. Looking at these oil prices, the gas prices, dude, I've been thinking about getting an EV vehicle myself here in Idaho. It'd be the first one in Idaho, I think. So it might
Oh
happen.
man,
It might. You might see me driving around one of those little Teslas or something. You
oh man,
know,
dude,
so
I'm
cute.
gonna be the one of the last ones kicking and screaming. I still like the rumble of the V8. I'm such old school there.
uh, as you
American
should.
Muscle, and you see my cars on the website and stuff. And so, yeah, I'm not there yet, but I can certainly understand why people, including yourself, are thinking about it. I mean, all you got to do is look at that bill at the gas pump to make you say,
Ugh,
how
brutal.
much longer do I
That's
want to
right.
do this? Yeah.
I know. All right, Bravo Mo wants to check out the VIX. See what's going on there.
And another good question. We talked about this last night, that we had broken down below the 13 level here. We don't get the VIX update until later, so we don't get an intraday. Maybe I can. Let me, give it a try here before, see if I can refresh the charts. But oftentimes the data feed doesn't do it. Now we're going to have a live version of this software very soon that people are going to enjoy looking at. But for now, the VIX is at 1408 at this moment. So that tells you that we have come back just above that 10-day moving average. So that's where the VIX is now. Same thing. We talked about this last night with our subscribers that we broke below 13. First time we've closed below 13, going all the way back here to June 22nd when we closed at 1291. And you can see what happened after that. We had that big spike back to 17. And then we kind of played around there for a while and came back, but no follow through today on the VIX, bouncing right back. But we basically have filled this gap and just trading above, see where we go into the close. But right at this very moment, 1409 now on the VIX. So just back above 14 right now. That 13 is a stubborn level. The market doesn't want to give that up. VIX doesn't want to give that up. So it seems like every time we get down there, it's held. Now, do we go back to 17? Beginning of the week will tell us, but for now, clearly 13 held.
Rob, I got the worst question I've ever seen in the chat just now. And
Uh-oh.
I don't actually know the answer to this either. Somebody said, JP said, did Rob win his golf game this week? Rob, what happened? I don't know the answer to this because I had to leave early. So what happened?
We did win. I
Okay.
opened my mouth.
Okay.
I opened my mouth on a birdie bonus pool, and so we did
Okay.
not have as many birdies as the other team, but we won on score. We won by 2 shots. So yes, we won.
Now we're talking. Now we're talking. Okay. Let's go ahead and let's wrap it up on this last question from Will then. Hey, congrats on that win there, by the way, Rob. But AMD looking weak, Will says. What does AMD look like to you right now, Rob?
AMD, and gosh, looking at AP or ADP, AMD lately. Everybody got excited back in May. We used to look at AMD all the time, and it kind of seemed to come back from the dead, and it was rocketing to the upside. And then it's just kind of faded away. I guess they're not using the words AI enough or the letters AI enough, so they haven't been able to hold the bid. But kind of ugly today, breaking down below that 10-day moving average. And if we head down here towards this wave 5, which it looks like where we're going, because that's an awfully well constructed 5 wave to the downside pattern. If we come down here to 90, then we can relook at things because there's a ton of support there as well, which happens to go right through that tap box time and price projection. So it looks like 90 is where we're headed. And after that, we'll figure things out and reevaluate and see if perhaps we get a bounce at that point in time. But you can see that the sellers have taken over here. on the DMI, the CCI. See, we have on our website, Idiwo Trader, information on all these indicators that we look at, good education. And when the CCI breaks from 0 down towards negative 100, it oftentimes goes to at least the negative 200 level. Negative 200 to positive 200 is the average range, but you look for every stock because every stock has slightly different ranges as far as where their extreme point highs and lows are. But that's a good general range to look at. And with that movement, it looks like it wants to come down. You can see that does happen to be the extreme point lows here on AMD. So it's kind of, this is a status quo type of a stock. And moving down there would kind of coincide with the market moving back down towards that 90 level. Interest rates weren't looking so bad. They changed. Let's see what rates are doing, because that's they are back up. So they've been pretty flat earlier, but a little bit of a bid in rates, and so yeah, that's going to make it difficult for any of these tech stocks to continue higher with rates staying as stubbornly high as they are, which is it's really kind of interesting. And we had a good discussion on this last night, because it's kind of counterintuitive. If the market is going to be weak, why isn't money going into the bond market? So prices should be going up on bonds and yields and rates going down, but yet you have a down day in the market and rates are going up. And so many banks, insurance companies, etc., are just still caught off sides on this whole interest rate thing. With the 3-month, we looked at 3-month securities last night are at 5.2%, and you just, when you can earn that kind of rate in such a short term, why wouldn't you want to do that? But with those kind of rates, you would think money's going in, so prices up, yields, rates down, but it hasn't worked out that way. And it's likely because there's a lot of short covering going on. Institutions, insurance companies, a lot of pension funds all own these type of things, and they've just been getting killed in the bond world. And perhaps some short covering there is helping to keep rates stubbornly high. Either that, or they feel like the market feels like the Fed is way off base here, and they're nowhere near done raising rates, and we're going to see several more rate hikes. It's the only two scenarios that I can come up with on why you would have a pretty good down day when and rates going up. It should be the exact opposite.
Yeah, you would think curbing inflation should actually help the market a little bit, and seeing all this selling off, seller pressure and stuff is I mean, I guess normal from time to time with the chips, with AMD, with Nvidia and stuff. I mean, obviously those are going to be good stocks to be looking at going forward. There's going to be such a need for AI computational power and the need to drive those, use those resources. So I think both of those companies are in a good spot, even though AMD is lagging sufficiently behind Nvidia right now and what they're doing. But either way, Rob,
They
thank
are.
you so much for dropping by the
I
channel
agree with you on
today.
both.
Yeah.
Yeah, no, I agree with you on both points, Brandon. As we
Yeah.
wrap things up here, let's just go out with Nvidia, because it's having a bit of a weak day today as well. But you're right. This is here to stay. It's not going to change. It's only going to get better. And stocks go up and down. They don't always go to the upside. Nvidia is got an extremely high valuation, so corrections do occur. And so you want to watch that 440 level on Nvidia. We'll talk more about that in the weekend update over on the Evo channel later on. But thanks, Brandon. Appreciate you being here, and thanks for everybody that watched and asked questions. Hope you all enjoy a great weekend. Look forward to talking to you again next week. Take care,
We'll see you
everybody.
guys. Yep.